Okay, welcome back. 7 points, all that is left on the Nifty. 10,866 is where we are at. Madhav Dhar is managing partner at GTI Capital, and he's going to lay it out for us in terms of what the market may look like in the coming year. Madhav, it's a great day, wrapping out 1 year, almost into the next one. So let's just begin there. You know, in January of 2018, if you looked at about, and I was looking at this data, 47 out of 48 global equity markets were above and majority of them were far higher than their respective 200-day moving averages. As of today, you know, 7 out of the 48 of those 48 global equity indices stand above their respective 200-day moving averages. So a lot has happened, a lot has changed. What is the market? What are markets, global financial markets, really telling us? Are markets already starting to price in a sharp growth slowdown into 2019?
Yes, I think they are. I think there are several overlays here. One is that you've had a very long-running bull market, especially in the US. So it's an old, extended economic cycle, an old, extended stock market cycle, and stock markets tend to get volatile in their late stages, and I think this is no different. And a lot was factored in, and overlaid on that was, I would say, I mean, whether you want to call it a bubble or not, was a big global tech bubble. So many things, as you say, were going on. At the same time, the Fed was starting to raise interest rates over the last 2 years. So it was inevitable that you'd have some kind of big correction at a minimum, if not a bear market. Now, the interesting thing that's going on is that, you know, as we all know or should know, that in the medium longer term, stock markets follow the economy and earnings, but in the shorter term, it follows changes in liquidity and changes in psychology. So the interesting dichotomy that we've seen in the last 3 months, both locally in India and certainly globally in the US, which sets the tone for global markets, the economy has been fine, earnings have been fine, cash flow has been fine, but changes in liquidity have been very negative, and more negative than just what interest rates will tell you, because the Fed balance sheet has been shrinking. So you have liquidity going down, psychology getting very jittery, but the economy and earnings are fine. Actually not very different than what's happening in India. So now that you've had a big downdraft, the S&P is corrected 20% high to low. So as you were saying, it's adjusted for both very frothy psychology and also adjusting for the fact that the kind of growth we've had would slow down. I feel a lot more comfortable that I think we are back to fundamentals. The economy is actually fine. You can have this thing go on for another year or two, and earnings are fine, and the froth, particularly in the extended areas like tech, have been completely blown off. So I think it's setting the stage for a much better 2019 than obviously what we've had, and frankly more than what I think most analysts are predicting, because as usual you start fighting the last war and worry about what the market's telling you. So I remain very bullish. I think we're going to have a pretty good year.
Madhav, well, Happy New Year firstly, or season's greetings as of now. It's still not the New Year. But nonetheless, Madhav, what's your outlook for India in 2019 then? It's been a choppy year. You know, we had the tailwind of crude softening by the close of the year. Otherwise, things might have been worse. Do you think that maybe this volatility would probably continue into 2019 for India specifically?
Listen, I mean, I think, you know, in the short term, again, India takes its cues from the US and the global economy, but medium term, again, I think it follows liquidity and earnings. And I think on both those fronts, India looks fine. I think India looks good to me. And I think it's been disappointing that we haven't had quite the bang-up reforms that we could have had in the last 2-3 years. But it's still the fastest growing major economy in the world. We're growing somewhere between 7 and 8%, and the odds are, if anything, that will accelerate. So that's terrific. Psychology is relatively depressed. I think the odds are we are at the end of a hiking cycle, both in the US and in India. and tough liquidity conditions that we've seen in the last 2-3 years, which is a combination of many things not worth talking about, are not gone away, are not okay, but getting better, getting resolved. So I think India looks particularly good because unlike the US, this is not an old cycle. We've sort of stopped and started. So we are at the low end of profit margins and at the early stages of an acceleration, whereas you could argue the US is at a later stages of both the earnings and margin cycle and the duration of the economy, even though I remain bullish. So I think India is even better underpinned, if anything, and at the risk of being even more contrarian than I usually am, I think politics is utterly overrated and overestimated in India. So this sense that because of the election, things will be edgy, I really don't think so at all. So I'm not worried on that count either.